That's those only 2 months. If I show you on a broader perspective, you could see where the selling had increased. And market bottoms, just like here, we had consolidated back in '08. 1, 2, 3 months up here. 4 months could not get above a closing price at resistance. So let this be your guide. This is what they look like. But then within this pattern, monthly pattern, and this would apply on a 3-minute chart, a 15, a 60, a daily, weekly, it doesn't matter. What does matter is that we're back into this multi-month consolidation. What Obama had to say last month or this last week might not bode well, and we may not take out that resistance level. This is what a horizontal monthly level looks like. Either you break down or you break higher. Either you're going to go up to the next resistance or you're going to break the trend right now. So basically right now in the banking index, we're at a multi-month resistance. We got a lower consolidation and a topping resistance level that is yet to be taken out. If the indexes are going to continue to go higher, they're going to need this index to be part of it. Because you can see on Friday, and there's been various times over the last 90 days, we've had some pretty broad-based selling and buying of equal nature. However, it hasn't been enough buying to take out that multi-month top. The topping pattern, I can show you, started right here in the financials. It started on 9/1. We have not taken it out. We've had some broad-based selling. We've had some broad-based buying. We've had some more selling, and we've had a little bit of buying. And within this pattern, we are going to be watching during the earnings season and the statements out of the administration that could derail the banking area by giving it taxation, is that what would be the catalyst and what will be the ingredient and how this will play into our upcoming earnings season that goes into full blossom. And during the next 3 weeks, forward-looking 3 weeks, is that we're going to have a bulk of the banking index coming out to say what they have. The TARP fund did the right thing. J.P. Morgan sold off. Goldman Sachs sold off last week. They can't seem to take any further higher. They make trading ranges in the individual equities, but because of this long-term resistance top, you know, Goldman Sachs and J.P. Morgan and Morgan Stanley are considering bank holding company. And what I'm trying to tell you is that when we go into the earnings season, why can't Goldman go higher? Why can't J.P. Morgan go higher? Why can't Morgan Stanley go higher? Why can't Bank of America? Why can't Wells Fargo go higher? Why can't they go higher? Because this index is at resistance and it can't break through. And until it does, these individual stocks here will remain in a trading range and should be sold short at resistance. If we were to break through here at resistance, you would no longer want to short these, because then they would have a catalyst of momentum to break higher. That's the S&P Banking Index. And it's key. And here's the next one. This is the Philly Bank Index. And they got different ones. You got your Citigroup, your BAC in here as well. Northern Trust, J.P. Morgan's in here. Capital One's a credit card company, but you got Zion Bank in here. Got USB, State Street. Got various different ones. Let's take a look at their pattern. Let's draw it over and take a comparison, because both indexes are very important. They deal with our financial system. This one is not nearly as important. It's still very important, but it too came off the March lows, and it too is in a different type of range, but similar, meaning that it found a bottom here at 40 in the index. 1, 2, 3, 4, 5, 6. That means that all of these stocks right here trade in this index. This index here, let me show you. Let's go bam. There's the top. There's the resistance. 1, 2, 3, 4, 5, 6. That means, just as any index, as I said about the Dow Transports, and I say about the broader market, is that the broader market in the indexes cannot break higher. Individual equities that trade within the indexes need to be sold short up on the top end. There is no indice breakout, the sector. There is no sector breakout. There must be and will have to be a sector breakout in order for stocks to perform higher currently looking forward in 2010. If we do break through here and go higher, that means that the momentum in these individual stocks will break higher. As long as this rectangular monthly consolidation, whether it's the transport, whether it's the banking index, which are the most important ones, and other indices in general, all rule will follow and be equal to the same effect. Because that's going to be how the SMF Pro Trading School and the traders who are in it are going to say, well, guess what? Whenever they go up to their individual resistance level, you sell short. You're not breaking out of here on a multi-month level, and they will not break higher individually. And once again, we have given you for free the greatest analogy that is the only truthful one, as in the relationship, am I going to be an aggressive buyer and hold, or am I going to be an aggressive seller into good news, or am I going to be an aggressive seller selling into resistance? And this applies for everything, not just the banking and the transports. It applies to internet. It applies to semis. It applies to retail. The whole cause and effect is the same.